Hello and welcome to our discussion on the interpretation of financial statements, subsidiary books. Subsidiary books represent a separate register maintained by the accountant on similar types of transactions. Examples would be one for receipts, one for payments of cash, receipt of purchase of goods, sales of goods. These are all called subsidiary books or subsidiary ledgers. And what they are is they're an opportunity to have a separate ledger strictly for those particular types of, or those particular groups of transactions. So all my sales transactions will be captured someplace. All my specific cash transactions will be captured in one separate subsidiary ledger or set of books. All my payroll transactions and so forth. And working towards a business entity concept, normally subsidiary books are used in a business. There's a good deal of reason for that. Whether it's going to be a manual accounting system or a computerized accounting system, it's an opportunity to do deeper analysis to provide more detail. And some very common uses for subsidiary ledgers. You have a purchase book, a sales book, returns journal, a credit note, sales journals, receivables book, cash books, payroll books are a great example, receiving documentation. These are all separate areas within the constraint or all these financial transactions and capture that you can have a space for more detail. In smaller operations particularly, it gives you an opportunity to have a separate capture, a separate place to do your analysis, and they come in very, very handy. Most of your computerized systems will provide these subsidiary accounts, particularly active ones like your accounts receivable and your accounts payables, things like payroll. They'll have subsidiary ledgers and subsystems that will allow you to do some more deep analysis. I mean, think about the format of a subsidiary ledger. It looks much to sound like a journal entry, much alike to a journal entry, where you're looking at your purchase book in this instance. So you have a reference date, a PO number, a purchase order number that you're referencing, the customer that we're discussing, LF, remember the ledger folio, which is going to give us a reference date, the posting date, and maybe to our other ledgers that we're going to be taking this information and posting it forward to. Details, a description of what we're talking about, an amount, whether it's going to be a debit or a credit. Another example could be our sales book. Again, we're looking at credits here most likely, right? So same thing, date of our sales invoice, name of the customer, where this is going to get posted to and the timing of it, the details, the description, what type of sales did we have? Was it a product? Was it a service? Those types of details, and the amount that we're going to be discussing. Okay, so these are captured in this instance in your sales journal, in this instance in your purchase book, and so forth. What are the advantages when we talk about a subsidiary ledger, or in this instance subsidiary book? It gives us a greater division of the work efforts. So rather than have a single person potentially doing all the analysis for all your sales transactions, all your purchase transactions, all your cash transactions, all your payroll transactions, you're dividing it amongst your staff. Particularly as our entities grow, you want that. You want separation of duties from a transparency point of view, but also it gives individuals more time to do that work on that particular sub-ledger. Again, because errors in one sub-ledger just go throughout the system. It gives us more detail. With that separate capture, that separate level of analysis, you can look at it in a different detailed way. You can do additional analysis, and again, with that division of work, specialization and efficiencies, the potential for time saving, because again, not one individual doing all the accountancy, doing all the capture, doing all the analysis. So you're breaking up that work into subsidiary captures. And even if it is a small number of individuals working on these, on your collective books, they have more of an opportunity to look at this space. So if it's all purchase transactions, if it's all sales transactions, if they're all payroll transactions, they're looking at a certain type of an account, so they can look for consistency. We talked about earlier, it can be in a chronological order. It'll help them to look at one particular space, the summary of that, and how does that transfer across. And we talked about our trial balances, so they can do a more deeper analysis, and it's efficient because they're not going through a bunch of transactions. They're only looking at one type of transaction. Availability of information, fact checking, facility and checking. So you have a single source, a single capture. You know where to go to look for the information, and you see where it's captured and can facilitate in your analysis. Thank you very much.